Hi, Brad here, and I want to talk about a question that was posed to me recently. And the question was, should I take the raise? Should I take or apply for a possible raise at my job? And initially I heard that and thought, absolutely. You have to be crazy not to. And still, the answer is yes. Okay. So this came from a client who is what we've been doing is we've been doing some tax planning, and in tax planning, talking about things like Roth conversions, contributing to Roth TSP versus traditional TSP, because this person was going to be in the same income tax bracket in retirement compared to what he's in today. And I get where he's coming from. Okay, so if he takes a raise, going to get more income, and then probably going to move up into the next tax bracket. All right, but my answer to that is, if you don't make the money, you don't pay the tax. Okay, so any additional income is going to be more money in his pocket. So ultimately, my answer to him was yes, you absolutely take the raise. But let's talk about it practically for a second. And I'm going to look at we're going to look at tax brackets here to see what that looks like. Okay. So I've got my cheat sheet up here for tax brackets for 2023, and if we scroll down here, he was married, and after deductions, he was just in the 12% tax bracket still. Okay, with just a little bit of room. And then if he takes this raise, he's easily going to be up into the 22% tax bracket. So if that happens, then you take the raise, okay? And then what he does is he looks at contributing to traditional TSP instead of Roth TSP. Okay, so you put money in traditional, then you don't pay any taxes on that money. So then in retirement, he will drop down to the 12% tax bracket. So it would make more sense in that scenario to tax defer the money, put it in traditional TSP so that he doesn't pay taxes today. In return for in the future, then he pays taxes at a 12% rate. Okay, so the answer is yes, take the raise, but also it may change things a little bit. Where he was contributing some money to Roth TSP, now if he gets that raise, then it's probably more beneficial for him to defer more money to pay the taxes later. Okay, because we're looking at a 10% difference. And again, that's assuming tax rates stay the same, that they're the same in 10 years when he takes the money out versus what they are today, which we don't know, and we can only plan today with what we know. So I hope that helps out a little bit. If anybody is debating on taking a raise or how it's going to impact your tax planning, yes, if you can get more income and it doesn't change the job, or it's a job that you like, absolutely do it. But then you may need to make some changes in your planning where you're investing money, as far as contributions to traditional TSP, Roth IRA, taxable account, HSA. So it may change some things there. Okay, so this guy's thinking along the same. He's thinking. He has the right process of thinking. Okay, he's thinking about tax savings, because when something like that happens, you get a pay increase. It's going to change things a little bit. Okay, so financial planning is an ever-changing thing. Taxes are always changing. Okay, whether it's your income changing and then changing your taxable income, or whether it's our government changing the tax rates on it. So just keep that in mind when something like that happens and you get a pay raise. Okay.